Mukherjea, how are you holding yourself? What are you telling your clients when they see their portfolio bleed like this? It's not happened for the first time, it's happened before, but unfortunately, every time whenever this has happened, it has caused pain, anxiety, fear, and people start remembering God.
I have to say, Nikunj, we've been waiting for this day for a long time. For a long time. How the hell did it take so long for this unraveling to happen in this bank? Anyway, it's now that it's happened, we'll be buying heavily through the day. We've said for a long time that there are 3 or 4 good banks in our country. There are 2 or 3 good NBFCs in our country. The consolidation in NBFCs is going to continue. The consolidation in banks will continue. And as I've said on your channel several times, much like we see in sectors like paints and adhesives and biscuits, Indian lending will also consolidate in the hands of a handful of companies. I suspect 4 banks. I suspect 3 NBFCs will finance our entire country, and we'll be buying as many of those shares as we can today, as we've been doing for the last year or so. I think the broader issue really is if you read the annual reports of this bank for the last 10 years, as I did, this was a disaster in the making for many years. It's finally happened. Let's hope better sense prevails next time as we see Indian banks getting built like this, because the writing was on the wall for a long time. But good news for all of us who live, work, and want to build this country is there are high quality financial institutions who are doing a terrific job. HDFC Bank, Kotak Bank, Bajaj Finance, all constituents of Marcellus's portfolio are amongst those. There are other good lenders as well. Let's hope that the way this country is built and regulated, good lenders, high quality lenders can continue to flourish, continue to finance the economy, and let's hope the bad apples are weeded out sooner rather than later.
Up until, when that fantastical situation comes in, Saurabh, and all the bad apples get weeded out, do you sense that there will be a lot of panic and contagion effect in the market? Because you can see that while Yes Bank is down 20%, there's an RBL, there's an Indiabulls Housing, even IndusInd Bank and all are falling 11% right now.
I think, to be fair, we don't have to wait for some, a great utopian day to come. I think the financial markets, the money markets have already been doing it, right? If you see how over the last year and a half, the CP market, the CP and the NCD market, which finances NBFCs, how the CP and the NCD market has discriminated between high quality NBFCs and weaker NBFCs, and how weaker NBFCs have been, because of market forces, been forced to shrink their balance sheet. I think the free market is doing its job. I think where the distortion is perhaps a little bit more is in the banking system, where because of the RBI's cushion, because the RBI acts as a lender of last resort, some of the banks who shouldn't be getting funded by the CD market have been able to get that. So effectively, because unlike NBFCs who really have no lender of last resort protection, the banks do. And the banks therefore have a cushion. The RBI gives the banks a cushion, and therefore weaker banks who shouldn't get funding are able to get funding for longer. That procrastinates the situation, that delays the inevitable, but finally the day of reckoning comes, as it has come for Yes Bank. But I think the free market does its job pretty well, and I think all of us who work in the equity market should look at the CD market for banks and the CP market more carefully, because those markets gives very clear signals as to which lenders they're backing and which lenders they're pulling away from.
Saurabh, when you see a shakeout like this, there is going to be a flight to safety. But in this market, when the flight of safety has already happened in 2018 and 19 and earlier part of 2020, a polarized market after this kind of a shock therapy, I wonder, cannot get more polarized.
It can. Look, as I've been saying to you on your channel for a long time, we haven't seen nothing yet in terms of polarization. If you look at countries like Japan and Korea, once they were done with their formalization phase, and in Japan's case, it sort of took between 1950 and say 1990, Korea's economy formalized roughly between 1970 and say 2000. By the time you've finished polarizing the country, say using Japan and Korea as examples, you'll have no more than 15 companies accounting for 3/4 of the country's PAT. We're nowhere near that as yet. I think the next 10 years we will polarize this economy in a way I don't think anybody in our country fully understands. People expect that as you grow, money will be spread all around, there'll be prosperity all around. That's not how free markets work. So just as in the case of the banking sector, today a titan like HDFC Bank, high quality lender, has only 6% market share. That makes no sense at all. I think a decade hence, even if HDFC Bank's market share is a mere 12%, this bank will be worth closer to $700-800 billion, right? So that's what polarization means. You can't have a champion like HDFC Bank with just 6% market share. It makes no sense. This 6% goes to double that in 10 years. HDFC Bank shareholders therefore make money. Ditto with Kotak Bank, I suspect. That's what polarization means. We haven't even started yet and people are getting worried about polarization. A decade hence, I suspect 20 companies will account for 3/4 of the profits generated in India. That's what your and my job should be, to push investors so that they can make money from this process of formalization, from the process of concentrating profits in the hand of a small set of really high quality companies.
That, but I'm purely talking from a stock market standpoint, which is that the 25-30 companies which have scope of gaining market share or have gained market share, they are already in the winners basket, whether it's Bajaj Finance or a Kotak, HDFC Bank, Pidilite. We all know the common names. So my question is that, look, a shock therapy has happened in the market because of Yes Bank or because of coronavirus. Markets will get more polarized. But do stock markets have scope to get more polarized? Because the economy is getting polarized and stock markets have got polarized, let's say, 2-3 quarters before.
It does.
More. I mean, you're saying that it will be only to 5 stocks now.
Absolutely. So I think so. Let's take the banking sector example. The notion that as Yes Bank and say, I suspect this is not the first lender either amongst banks and NBFCs to fall by the wayside. I think this will happen to others. As that happens, an HDFC Bank and a Kotak Bank, to use two examples, gain market share. I suspect Axis and ICICI Bank will also gain market share. And I do confess that we own many of these stocks in abundant quantities in many of our portfolios. So as the weaker lenders fall by the wayside, a Bajaj Finance and NBFCs, an HDFC Bank, an Axis Bank, a Kotak Bank gain market share. As they gain market share, for them to do that, their cost of funds also has to drop. So my suspicion is the stronger banks will get funded at lower rates, the weaker banks will get funded at higher rates. The market share polarization will become very sharp, and as the market share polarization becomes sharp, the flight to safety, as you nicely put it, Nikunj, the flight to safety will be basically a flight to HDFC Bank, Kotak Bank, Axis Bank, Bajaj Finance, and so on and so forth. So if you ignore the knee-jerk reaction today, over the next few months, over the next few quarters, FIIs, DIIs, retail investors will say, I want to invest in India. I want to make money in Indian financial services. I need to buy the quality lenders with strong balance sheets, high quality underwriting skills. Who are they? They are Bajaj Finance, HDFC Bank, Kotak Bank, Axis Bank. Let's go buy those shares. As a result, these lenders will get funded at lower cost and their shareholders will therefore make more money. That's what I meant by polarization has just begun. We ain't seen nothing yet.
Okay, Saurabh, that's the list amongst financials. But what outside of that segment? Sure. I think beyond financials, I think the theme that will become prominent as coronavirus plays out at a psychological level. I think coronavirus is very interesting in that for an economy like ours, I'm not so sure it's a big economic event. I mean, there'll be obviously specific supply chain disruptions in pharma and auto, but our economy simply isn't that interlinked to global supply chains, to China, to America, for it to be a massive macroeconomic shock. What coronavirus is doing is very interesting. Because of the mobile phone and because of social media, it's a big scare, right? It's a psychological scare. All of us are putting our masks on at airports and so on. So that will trigger a different type of flight to safety. And the sort of stocks who can benefit, I think, out of this flight to safety are natural, very psychological safe harbors, say such as a gold as an asset
asset class, and Titan as a jeweler, such as a large provider of APIs like Divi's Lab, such as a provider of glass-lined vessels, GMM Pfaudler, which is by far the largest manufacturer, I think 60-70% market share in making these glass-lined vessels within which drugs are made. So psychological plays on safety, a Nestle in milk powder, a Titan in jewelry, a GMM Pfaudler in glass-lined vessels, and Divi's largest maker of painkillers, largest maker of cough syrup in the world. These sorts of psychological plays, I think, will have a super run, because we are ultimately, much as we would like to believe we are logical animals, we are ultimately creatures of greed and fear. And as fear kicks in, people will fly towards stocks that they instinctively believe will benefit from this correction. And I stress again, all of these names I gave you, we do own it in fairly generous quantities in several of our portfolios.
Just repeat that list again. GMM Pfaudler, Divi's, and what else?
So GMM Pfaudler as a maker of glass-lined vessels, Divi's Lab as the largest maker of APIs in India, largest maker of painkillers in the world, cough syrup in the world, Titan as a play on jewelry and gold, and finally Nestle as a play on baby milk powder. Presumably babies will drink milk regardless of the coronavirus. So Nestle is predominantly, the bulk of its free cash flows arise from making infant milk powder. And Nestle, I think, grinds on selling its product, growing profits at a healthy pace, and shareholders flock to it as a flight to safety in spite of the PE multiple. So psychological safe harbors, right? Pharmaceuticals, jewelry, basic essentials, psychological safe harbors, I think, will have a good run, as what will, I think, be a very sort of traumatic event. We'll all see as coronavirus sort of grips us before summer arrives, we'll all want to feel safe, and this will be a nice way for us to feel safe, buying stocks which are nice, comfortable places to be in what is clearly an unsettling time.
Okay, Saurabh, we have this habit of asking our guest what to buy. Let me ask you what not to buy. Where one should not get trapped, attracted, or get carried away with the decline.
Right. Sure. So I think there is this sort of bizarre notion which does the rounds in the Indian market every now and then, which is buy large companies whose price to book and price to earning multiples are low. It's a sort of very strange notion, because a lot of these large companies that people seek to buy, you can clearly see glaring governance issues, and in many cases the annual reports, when you read it, make no sense. The basic financials don't stack up. So I think every now and then we sort of hear that, look, because Asian Paints is expensive and because Nestle is expensive, it'll fall more in a scare. So don't worry about buying Asian Paints and Nestle. Their compounding engines are of no great value. Why don't you go and buy something like a play on engineering and construction, like an L&T? Why don't you buy some real estate, or why don't you buy a PSU bank? That notion really sort of beggars belief, because on the one hand, you have, in a difficult economic climate and a difficult financial climate now, courtesy Yes Bank, you need to invest in absolutely champion franchises. This is not a time where you invest in weak companies and try to make money. You invest in champion franchises like a Titan, like a Nestle, and they take you through difficult times. Their compounding engines keep chugging out profit growth in difficult times, and because of their earnings compounding, you make money even in difficult times. The notion that you buy high beta plays, low price to book, low PE multiple plays in these times, I think is a very dangerous notion. And I find it a little worrying when I see fund managers peddle that, because there are millions of people watching. And obviously, those people might end up buying these sorts of companies to the detriment of their net worth.
Saurabh, do you think the trick for the next at least 1 year is also going to be in asset allocation? Do you increase your exposure to gold as well? The rationale that you put forward for a Titan, or what is it that you do with bonds, or do you take a concentrated bet on equities? I know you're a pure equities guy, but regardless.
Look, I'm not a gold expert. The reason I was highlighting Titan was I can see that at a psychological level, gold will be a safe harbor. And obviously, like everybody else, I'm seeing the gold price go up. The reason I was highlighting Titan was if I'm in the stock market and I want to play gold not just as a commodity, but also as an end consumable for millions of Indian households, Titan is a logical play on that. You probably will find better experts on the yellow metal for them to opine on should gold be a big part of your asset allocation at a time like this. Beyond that, it's not clear to me, right? In this current juncture where I reckon interest rates will fall further, I think the RBI will cut further given everything that's happening, global cuts, coronavirus, demand drop in the world outside, cheaper oil, yes bank under the pump. I think the RBI should be cutting rates. Therefore, I'm not so sure, moving to fixed deposits and government bonds in great quantities will be a tremendous idea. And hence high quality equities for lack of other choices I think should be the place where you load up on at a time when others are feeling unsettled, right? Warren Buffett put it very nicely, when there is blood on the street, if you're not buying, then I think you're doing something wrong. So our job is to keep our heads in this time, and as clients give us money, we put them to work, and on days like this, it's actually not very difficult to put it to work. We've been expecting this for a long time, and therefore buying good quality banks and BFCs shouldn't be difficult for us on a day like this. But I think buying quality stuff, buying quality stocks is the best I can do for our clientele. Maybe there's an argument for gold, but you need to talk to a commodity expert for that.
I quote Warren Buffett, but I like to quote Ramdev Agrawal, one of my favorite investors. And Saurabh, this is what he said: "Sasta roye bar bar, mehenga roye ek bar." I think we are going through that phase of the market where expensive stocks today are correcting, which is mehenga roye ek bar. And we're going through that phase of the market where there are very few days where low quality stocks are going higher. So that is what we need to be careful of. I think Saurabh is making a great point that if you want to buy, don't be tempted by the price. You should be tempted by the quality of the business, and the economy is going through this kind of an bent where good companies will only revive and survive. So be very careful in what you're buying. Yes, sir, Titan has not fallen 50%. Yes, sir, Bajaj Finance has not fallen 10%, but you should be focusing on those stocks rather than trying to, look at this entire phenomenon. 100 रुपए की चीज 50 रुपए हो गई और कितना गिरेगी. Don't be carried away by और कितना गिरेगी phenomenon. Saurabh, would you agree with me?
Absolutely. Or kitna giregi is not in our control. Neither is it something we can guess. All we can guess is how much money will Bajaj Finance make over the next 2, 3, 4, 5 years as they profit from this dislocation. How much money will Titan make as the jewelry sector formalizes in India and as gold remains an essential part of almost every Indian household's asset allocation. That's the way to think about India. That's the way to make money in this country. That's what makes living in India a lot of fun.
Saurabh, we'll leave it at that.